Hey, welcome back to our podcast, your go-to source for all things real estate and lifestyle in the heart of Fort Worth, Texas. I'm Jackson Christian Berry.
And I'm Jean Kristen Berry.
And together, we're here to guide you through the vibrant world of Fort Worth and surrounding suburb living.
We believe in creating a community where everyone feels at home. And that's why we're committed to bringing you honest, expert advice in a fun and friendly way. From the bustling streets of downtown to the serene suburbs, we've got the scoop on what makes each area unique.
Each week, we'll dive into the latest market trends, offer tips for both buyers and sellers, and share insider knowledge to help you make informed decisions. So whether you're a first-time home buyer, a seasoned investor, or just curious about some of the Fort Worth charming neighborhoods, you're in the right place. Let's jump into today's episode. Well, hey y'all, and welcome back to Welcome Home Fort Worth. We are so excited that you have joined us this week.
Excited?
The most excited because guess what time it is?
It's market time, update.
Market time. It's market update time. Really pumped about this. Our market is doing some really wild things right now.
Yeah, it really is.
Some very dramatic things. And so it's really exciting to have a chance to just sit down together and look through all this and figure out what it means for somebody who's thinking about buying a home right now and somebody who's thinking about selling a home. So this is your market update for the month of May. Two things I always make sure to note on this is that real estate, first off, is hyper local. Yeah. Keep in mind that this reflects basically a mixture of Tarrant and Johnson, predominantly with a little bit of Ellis and a little bit of Parker as well thrown in. So keep that in mind for these stats. On top of that, it can vary based on neighborhoods. It can vary across the street. And so if you're really wondering about what's going on with your home or what's going on in your specific local market, let us know. We're glad to get you some more details for that as well.
And what I like about this is that the market feels a certain way. It's doing something and it feels funny.
Yeah.
And then you get these numbers. It's like, oh,
that's what happened. Exactly. Yeah, that's a lot of what's going on today. So we're really excited about that. So that's the first thing. And then I think that this is all single family. I've said it before. I think that's all I need to say actually.
Residential single family.
Yep, cool. All right, let's jump in. So we always structure this market update in two main ways. We first address what kind of real estate is, your standard economics, supply and demand, right? That's the way our market works. And so when there's a ton of supply, which is houses on the market, houses being offered for sale, right? And then supply, demand is going to be more about factors affecting people being able to buy. So their access to cash, their access to what are rates like, things like that. And so jumping into supply, talking more about if you're a seller, what you'll probably experience and who you'll be up against, right? And what your market conditions are mainly like. Here's what's going on. So number of new listings. This is down 14% month over month, and it's down 6% year over year. So we have a little bit less houses on the market today than we did last year, and certainly than we did last month. We have less houses coming on the market is what I should say. It's not houses on the market today. It's houses that have actually come on the market through the month of May. New listings that people come on the market, which is really indicative of how shocking the spike was in April. We had a spike of 3,374 homes compared to this month, which is 2,946. And let's see, March, which was 2,968. So we broke 3,000 just in April.
It's almost like everybody all of a sudden said, we're tired of waiting.
Well, and it reminds me so much the way that it just popped in April like that, and that we didn't see a consistent trend into May like we might have expected since it's seasonality, right? It's here. It really was this when I read it too, I was like, this is people being pent up and just ready to sell for long enough. And finally, whether it's that kid that's on the way or that life situation that's happened, it was like, I've got to do this. I'm doing it this year. Like, it's happening.
It could be too, new construction started offering some amazing deals, slashing prices, great interest rates. Yeah. So that might have enticed people too to say, come on, let's do it.
Sure. Yeah. I think I think you've got a lot of life situations though, because not everybody's moving into new construction.
Right.
I think you have a lot of life situations that really would have moved in 2023, but with rates being kind of the shock factor of 2023, I think that this is both the people are getting used to having higher rates for longer, really is what's happening right now. Yeah. And then I think people are also just like, I think it's just, we have to move. Like, I'm so tired of these kids being right next to me, or I'm so tired of living next to this neighbor that drives me nuts, or whatever that situation is, right? And so really interesting. April was the biggest story though so far. April was a big boom in new listings. And we really felt that, and you'll see what happens next. So Active listings, so this is the amount of supply. This is truly a look at supply. The amount of homes that if you were a buyer of real estate, you could get in and actually shop for that are on the market today. 6,546 homes on the market today as of the filming of this podcast. Up 14% month over month and up 44% year over year. Okay, so it's big. It means what we saw last month is the same thing. We're hopefully, and a lot of economists are predicting that we really did hit our bottom last year of active listings on the market, of supply. Supply really bottomed out last year. And because we're up 44% year over year, and it's still trending upwards this month, it's a good thing. It just means that we're tracking back towards a little safer market, and safer meaning like, man, in 2021, 2022, you had such little supply that rates being so low caused the frenzy, right? If supply isn't much higher and rates drop to not 2 or 3% like we saw, but like even 4 or 5, right? If they ever get to that kind of level, you're still going to see a frenzy. It's still going to pop up. Homes will still appreciate, right? There's still going to be that thing that happens because there's still this desperation in the market for homes and supply. And so trending positively helps us have a bigger buffer between like normalcy and crazy. Right? I mean,
and appreciation rates going out the roof.
Well, and for home buyers and home sellers, like, you know, obviously that's a good thing for a homeowner for sure, but that homeowner traditionally,
only if you're selling.
If that homeowner has to go buy a house, it creates a difficult market where at least your home is probably appreciating at the rate that everything else is. So you're making the money that everything's making, right? That you're going to need to get back to the market. But it's
the big conversation is always property taxes.
Yeah, totally.
Right?
And that's the thing that a lot of people are talking about. Everybody's talking about homeowners insurance, right? Because that's increasing with all of the, with the natural disasters that are happening and everything like that, right? But I mean, taxes are still in the background every single year. If you don't have your homestead exemption, they can really spike up. But a homestead exemption, they're still going to probably try to go as much as they can increase every single year. To just try and keep up.
For sure.
So. Yes. So that's active listings and what's going on there. Interesting. Again, what's happening there. Let's see.
Yeah, that's really well. And the thing about the property taxes too, we had the increase in the homestead exemption. So that helped a lot of people this year. But man, it's still, a lot of people are really, really having a hard time with the taxes.
Totally. Yeah. Because I mean, the nice thing is in the US, like, our 30-year fixed rate, right? Like it's not varying. If you got that 2%, you still have that 2%. You have the 3%, you still have the 3% rate. But insurance is varying and taxes are varying. And those all go into cost of homeownership.
People's escrows are coming up short. Having to refund and do some money in the escrow.
Yeah, so not very fun. All right, number of sales did drop. Now, every time we're 2 days shy of the end of May as of recording this. And so I expect this to go up, but I don't expect this to go up much more. And so we are down 28% month over month number of sales. So sales have dropped, down 44% year over year. And so what I see, if you juxtapose those, we got 44%, right? 44% increase year over year in active listings, right? Supply that's on the market. But a 44% decrease in number of sales, which is how fast those homes are moving off the market. And so what does that mean?
So we've got more inventory.
More inventory and slower market.
More days on
much slower market, right? Which is what we felt. We're feeling that all across the board. And so that's for me, the number of sales being less, but the number of listings being higher, like it's created a slower market, which we'll see here in just a second. Because, first off, with those number of sales, every time we track sales, I always am interested to see when you're in a real estate negotiation, there's the opportunity to, as a buyer, ask the seller to give you seller concessions or contributions, right? And so I always like to see how many deals, how many of those sales that actually closed, what they were offering for seller contributions. And this month, in the month of May, 968 sales offered a concession, which is 80% of all sales.
80%.
Had some, and that ranges from $106 to $39,000, averaging at about $6,610.
Okay.
So just very interesting, I feel like. So
it's a different market than it was last year.
Very different market than it was last year.
We meet with sellers right now, and they're saying, there's like 5 people in my neighborhood that have been on the market forever. How's the market? Is the market going bad? What's happening? And everybody's pretty doomsday about it. because of the days on market that have increased. And it's really important to know that things are still selling. But like you're saying, that they're just longer.
Well, there's
longer.
the bigger conversation, I feel like, on that point is more about like pricing. So
Absolutely.
a year and a half ago, probably not truly a year ago, right? But a year and a half ago, pricing, you had a bigger variance when pricing. So if you were, let's say the home was worth, I don't know, $450, right? And you priced it $450, $460, we'll just say, right? You had a bigger variance. You'd still see a lot of demand come in for that. You still see a lot of people kind of have a frenzy-like experience with that price, even though you were $10K off, right?
Yeah, they tolerate it.
They tolerate it.
Yeah.
Here in this market, they don't tolerate that.
No tolerate.
And honestly, may not even tolerate the $450.
The average.
The
pricing.
average, the value price,
If
right?
you're not pristine.
Yeah, you've got kind of three options with pricing, right? With pricing, you can go aspirational, which is pricing it above what you think it's worth. You can go kind of at value, which is pricing it just right at like $450 in that example. And then you can go pricing it in auction style, which is really more going more to that for a $450, maybe like a $435, $430 kind of pricing, and letting the market do the work of creating the demand, right? But in all of those scenarios, like that, the point is pricing is a bigger deal. So I think not only has days on market gone up, but real estate agents, I don't think, and I haven't seen, they haven't really adapted to the all of a sudden slowing that has obviously happened from our data, right?
Yeah.
And so I would, if I was not a real estate agent tracking these things, I'd be nervous in my neighborhood too, because my homes are sitting longer. It doesn't look like there's a lot of activity going on. And the reality is it's certainly slower, but the price may just have to be a conversation with those people.
Well, and like you said earlier, it's all about competition.
Yes.
So if you've got 5 houses that are sitting and you come on the market and you're fresh, if you're not better than those 5 houses that have been sitting, or you're not at a better price, then you're going to sit too.
100%.
Yeah.
Yeah, and there's no guarantee how long you're sitting, right? Like, and even we've talked internally about, there was a time when probably middle to late last year, where even like, let's say we had a seller who wanted to try aspirational pricing first, right? And so we'd start there. After 2 weeks to a month, maybe we'd have a conversation and say, you know what, like it's time for a price change. We haven't seen the activity we need to see in order to accomplish this goal, right? Like even just doing that is causing people issues in this market today. Even that variance of just days on market hitting 30, that all of a sudden creates so much extra weight for the listing to carry, and doesn't create the demand that you need to really get buyers to move forward. We had a property that we called for highest and best on. And one of the things that I noticed with it was very interesting is that in previous years, everybody just dives in. It's like, let's do this. Let's go gung ho. We're going to make this thing happen, right?
Sweeten it up.
Sweeten it up, right? You are in it. You want this house. You're doing it. Highest and best scared off some folks.
Oh, yeah.
And for me, what that was an indication of is that it's easier in this market for buyers to get cold feet. Which makes sense. We'll get into why. I mean, you got higher rates, you got a lot of inflation, you have so many things affecting their buying power, right? But I just thought that was so interesting, the effect of that.
It's different. So you have to negotiate different.
You have to negotiate so much differently. Yes.
To get the most out of your situation. Yeah.
But it was a very surprising reaction that, again, for me was so indicative of just a softer market. At least for sellers. Honestly, the buyer market, you guys, it's a better buyer market today.
Oh, absolutely.
It's just, and I'll show you the exact stat why I believe that, and can kind of prove that here below. It's a better market to buy in right now for sure. But as a seller, it's for sure your power in the market. You have to be so much more strategic. You have to be marketed well. You have to be priced well. You don't have as much variance as we've had previously. So real quick, closed price average, you are up by about $4,000 this month, up 0.7% month over month, and up 2% since last year.
Okay. So still appreciating.
Yep. I found a cool stat that I think I texted you this, but didn't. I apologize. The metros, nationally speaking, with the smallest annual home price increase, were Dallas was number 1, which was unchanged. Austin was second, 0.3%. San Antonio, 0.6%. And Fort Worth was 1.9%, which I've got it at 2%, but it's right there, right?
Yeah.
So just know that nationally speaking, we had we've had a slow year.
Yeah.
We've had a slow year. 1.9% is we're number 4 rated as the slowest or smallest price increase, or average home price increase is what I'm trying to say. So anyways, I thought that was interesting.
Yes, it is. It is.
So
Now, compared to probably some states that actually went backwards.
no, nationally.
So nationally,
Tampa's number
okay.
5.
Okay, so that includes
Top
Arizona,
4,
California, all
Top 4,
Okay.
all in Texas. How wild is that?
I wonder if that's because we appreciated so much.
It had. I mean, Austin is
Yeah,
actually
so
Austin has depreciated.
Yeah,
Austin
well,
has actually experienced depreciation in their market.
There's just been such a boom of growth. All of a sudden, it's
Yeah.
catch up.
Yeah, which is still good though. And real quick, just because I'm a Fort Worth boy versus a Dallas boy, y'all live in Fort Worth. Let's just welcome home Fort Worth. This is why you live here. 1.9% versus 0% change in Dallas. This is why you live in Fort Worth. Let's just be real here, okay? Just point that out. But yeah, I mean, it's just interesting.
Yes.
I couldn't describe why. There are a lot of things that I think could go into that, right?
Yeah. There'd be a lot of factors.
But I just think that that's a unique thing to be aware of.
Yeah.
And as you see national headlines, to realize that we aren't experiencing the national experience, if you will.
Yeah.
We're actually on one of the fringes. We're actually the extreme smallest annual home price increase, right? So this is a unique thing that separates us from the nation. So, and what's happening here in our local market. Thought that was cool. So this is the point. This is why it's a better buyer's market today. Okay.
Bring it.
And sellers, why you've actually taken a hit, just to be really upfront with you. Not trying to be mean, not trying to be scary, not trying to be anything more than just factual. What's called the absorption rate, which you have probably typically heard this as like months of supply. It's the same thing. I don't quantify it in months of supply. I do it more the absorption rate. And so with an absorption rate, it's just simply number of sales divided by number of actives, right? So you're comparing how many are coming off the market to how many are on the market as a whole, right? 15% or less is considered a buyer's market, which means that homes are being very slowly taken off the market, and so buyers have more buying power. 20% or more is a seller's market, right? So sellers are still in control. Homes are moving quickly, and so that they're able to sell quickly and get the prices they want in terms because there's more homes than our buyers are taking it off, right? We are still technically a seller's market, to be clear, which again, we're record low inventory. So that's why it's still a seller's market.
Right.
March was 0.39, so 39%, right? April was 0.31, 31%. May is 0.26%.
So we're dropping.
26%, right? March, April, May, you've actually seen it, seasonality speaking, where we would see a ramp up.
Yeah.
You would see it go the other way. It is decreasing, so which means that sellers' buying power in the market or sellers' negotiating power in the market is decreasing as buyers' power is increasing.
Right. Still seller's market.
Still seller's market.
Still strong. Just comparatively
and
to before.
Will be a seller's market, in my opinion, for a very long time.
I think so too, with the inventory.
Inventory. Just because solely there are not enough homes on the market. But it's decreasing.
Hey everyone, real quick before we get back to the show, if you're on Facebook, Instagram, or YouTube, we'd love to connect with you. We post a lot of content like this in case you miss an episode, along with more Fort Worth and surrounding suburb, local insights, and finds. You can find our team at the Christenberry Group on all social platforms, or you can connect with Jackson and I personally on our Facebook and our Instagram accounts. Just be prepared for lots of pictures of my grandson on either account. Now back to the show. We just don't have the people influxing like we did. We've got the big interest rates. And so it's slowed down demand. Demand's the big picture of this one.
My favorite phrase is that we were in 2021, 2022, you were in a want to buy market. If you wanted to buy, you could.
Yeah.
You just went and bought, right? Like there wasn't a lot of impedance. The biggest impedance was like the amount of people competing, right?
Yeah.
But that was it. Now you're going to need to buy market. So buyers have to have strong motivations.
Yeah, that's the way to say that.
If you're a person watching this who's negotiating on a house right now, I would make sure your agent is asking those buyers about their motivations and why they're wanting to buy, because that's really important to make sure they stay in the deal and don't get cold feet.
Yeah.
Right now, it's a very, very important thing.
Yeah.
So I keep that in mind. So to your point, interest rates, right? Talking now, getting more into the demand side. What's affecting demand? What's going on with demand? Interest rates are up. Let's see. They're actually positively. So they're down 0.23%, which is a good thing. You want interest rates to go down, right? So down month over month, 0.23%. And since last year, they're up 0.13%. Okay. So we're getting pretty close.
Okay.
Today was 7.16 on the market for the 30-year fixed.
So it's kind of flat.
Over the last year, we've seen it hit 6.61. And we've seen it hit 8.03.
Okay.
So we're 7.16. So you're still kind of close to the middle range for that.
Yeah.
So Interest rates are the story. I think more people are getting used to them.
Yeah.
I think more people are aware of it. Higher for longer is what I predict, and what people that I've listened to are predicting. I don't see at the beginning of this year, you may have seen some headlines that say year of the fives and 5%.
They were saying by the end of this year.
Yeah, and maybe I'd be really surprised.
Sixes would be nice.
Sixes would be awesome if we had a 6 handle. That'd be fantastic going into 2025.
Remember 2 years ago thinking about 6, everybody's like, oh no, not 6.
Yep. Well, it's really interesting to talk to folks that are probably really millennial age, maybe like millennial, like younger millennials kind of thing and below. Because that's their expectation of a market, is that you should see 2, 3, 4% kind of thing. So 7% is this outlandish thing, but statistically speaking, like 6% is the average over the last 40 years, right?
Right.
And so it's really just us understanding more of what we will probably see the most of in our lifetime is just this average around 6%. But anyways.
Yeah, because we bought in a 14% rate.
Yeah.
So it'd be nice if we don't get to anything crazy like that.
But in that market, you've told me about that before. In that market, the sellers were offering more, right?
There's always work around kind of situations that come out of the various struggling markets.
Yeah.
And sellers were doing special concessions, we had special programs.
Yeah.
The
market adapts.
The market adapts.
It's got to be competitive.
It always adapts. Yeah, there's things that come out of it. Yeah.
Yeah, it makes sense. Yeah, that's interesting. That's very interesting to think about. So I always compare the first question any buyer asks us, any buyer thinking about buying in a high interest rate environment, is should I buy or should I rent, right? So every single month, when we do this market update podcast, I always like to break down those comparisons so we can just keep an eye on that. Since you did have an increase in the average monthly or average sales price, so at that average sales price of, what was it? It was $458,058. I can't. Why is this so hard to say? 458,357. Good grief, that's the words. At that, you're probably looking around a $3,200 monthly payment. Our average rents in Tarrant, Johnson, a little bit of Ellis, a little bit of Parker is around $2,617. So about $400 off, maybe $600 depending on your insurance rates and the taxes of the area you buy in. So it's still cheaper to rent. We have a whole podcast episode, I think it was February's month, where I break out like the whole story of that. So if you haven't heard that, I recommend you go check that out. The whole story of that is just like, obviously make sure that it's not just monthly payment. You got to understand that there's appreciation happening with the home buy. There are also costs, AC going out, whatever that go along with it. So there's things that happen for sure. You're paying into an investment versus paying money just out the door. The excess money you save, if you're saving $400 to $600, are you actually putting that towards the S&P or something where your money's beating inflation, right?
Your money's working for you.
Where your money's actually keeping up with inflation. At least are you doing that? Because that's what's going to happen when you put it into a house. It's going to keep up. And so those are the things to just kind of have a holistic conversation about that. And of course, are you going to be in the same house for a year? Are you going to be there 3 years, whatever? That's also part of that. So that's part of that. Days on market is down, which makes sense. Seasonality, we see this is where the most people are in the market. And so 49 days today. I expect it to go up probably about 3 days with the last 2 days.
What is that number again?
49 days on market.
49, that's average.
49 days. Yep, down from 55 days on market.
People are having a hard time hearing those numbers.
Sure.
Because, they were used to 1 weekend and it sold, 1 weekend and things sold.
Yeah, in March we were in the 60s.
Yeah.
So,
really getting more comfortable with that and not panicking is important.
Yeah, and that's the I don't know. It's definitely, I experience this being newer in the business than you are, right? So being 3 years versus your, 19, 20 years or whatever. I experience this because this market has shifted, right? So I'm living through, you've lived through like 5 of these, you've worked through 5 of these, right? A shift where all of a sudden things don't work the way that they were even just 3 months ago, right?
And it's so fast.
And it's so fast, and you feel it. It's a feeling. It's just this like, oh, this is different than it was, right? And so for me, that's what's so helpful about data. If you can just get in the data, if you're a real estate professional listening to this, I advise you to just get in the data. Look at what the average days on market for that area are, see how you compare with that, check your pricing, make sure your pricing is still competitive. If it's not, I'll have that conversation.
Because then you can come up with some techniques,
Yeah.
some solutions for how to deal with what's
Well,
going
that's
on with the
my
market.
favorite thing we track every single week is the concessions because it's just so nice to know that that's normal.
Yeah.
It's what it feels normal in our real estate negotiations. There's always an ask for that. There's always somebody coming forward and doing that, right? And to see that it's like 50 to 80% depending on the month, right?
Yeah.
Like of deals that close that are offering that, like that's huge. That's
Well, and it's
significant.
important for a seller who hadn't been in the market in 15 years that comes to the table and
Yeah.
says, I'm not planning on giving them any extra money. Like, well, we need to show you what's
Yep.
going on in the market
Yep.
right now. This is the market you're about
Yeah,
to step into.
and you can do that. It's your home sale. You can do it. It may take longer. You just need to be aware of the things that go along
That's
with it.
the average.
80%
Yeah.
last month, in the month of May, offered a concession, right? And so it wasn't huge. $6,000 was average, right? It wasn't something massive. There is a cap on, it's 3% for
Right.
conventional loans, 6% for FHA, and I think VA is 6% as well, maybe question mark. There is a cap on it, but again, it's I love tracking that because it helps you know what's normal, and so
Yeah.
that way you can gauge your activity you're getting with your showings, with your feedback, whatever it is,
Yeah.
against that.
Well, and if you get a buyer who's asking for concessions, you can say, now I know that this is pretty common right now. Just in this situation, we're not at a place where we're going to be able to do that.
Yeah, it's a
So,
seller.
but you know
Yeah.
why they're asking
Yeah,
for
they
it.
can do whatever they want to do. Totally. Yeah.
Yeah.
Yeah. All right, so looking ahead at the month of June, we track pendings. Pendings are kind of our future leading indicator, I believe is the word to say that. So we've seen in February, it was 2004 pendings. In March, 2080 pendings. In April, 2,257 pendings. And May, 2,220 pendings.
Okay.
So, it's seasonality. It's
Yeah.
beginning. Homes are going.
Yeah.
Again, number of sales are down 45%, 44% year over year, right? So it's a slower market than it was last year at this
Sure.
time.
Sure.
So-
Be interesting to see what that does in the fall. For properties that are going on the market later in the year and that are kind of sitting a little bit longer. And then, of course, then the seasonality kind of disappears.
And then election.
And then election.
And then election.
Yeah.
Like that's what's going to be so interesting to watch this year.
Yeah.
This will be my first election cycle to work as a real estate agent through.
Yeah, it's fascinating.
So
it's always fascinating.
I'm very interested to see it because you can go back and see the data trends of how it's a steeper level off
It is.
in activity.
And then it's back.
Yeah, and then it pops. Yeah, and it's
right back.
yeah, it's really fascinating. So I'm really interested to live through this and to see what this feels like as a professional.
So I mean, if you are a seller, what I would say to people is if you're a seller and you've got to get somewhere and relocated or whatever you're doing before the end of the year, you're really going to want to speed it up. And if you want to get the most money you can and get something done in the next few months and be aggressive with your pricing and just get it done.
Yeah, because there's something that's going to slow its activity down
Yeah, because
in a big way.
you've got things coming.
People are like, let's see what happens.
Yeah.
So,
Yeah.
all right. Well, each and every week we like to end it. Well, so summarize this real quick so that people can really see this. Sellers, what would you say?
Sellers, I would say.
After hearing all this, what would you say?
Sellers, there's such little tolerance for properties that aren't pristine or for properties that are price poor, that are below average or that are above average. So you're going to want to, if you're about to go on the market in the next 3 to 4 or 5 months, something like that, you're going to want to price it aggressively, have it pristine, do the work, get the staging done, get the things repaired, and be prepared for negotiation.
Yep.
Yeah, you're gonna be prepared for that.
Sure.
And then it will get done. You will get it done. And pay attention to your competition.
Yep.
Make sure your agent is watching the competition of what you're competing with. And if you pay attention to all those things, it'll be done and you'll get it taken care of.
It'll be longer though, right? So
It's
you
longer
can't
days
move your
on
house
market.
in 30 days.
What
like
was
you
that
used to.
average number?
49
days on
days.
market?
Yeah.
49
And then
days.
add 30 days.
Yeah, 'cause you
Because
have to
days on
close
market
it.
stops
Yeah.
at like when it goes under contract.
Right.
Contract takes about 30 days, right?
Yeah.
So to sell your home, you're looking at what is that? 70
Little
days,
over 2
80 days,
months.
right?
Yeah.
And so it's not going to be a quick move like it was before, And if you're wanting to, especially if you're wanting to time the market and be in that new home before the next school season starts or whatever,
Right. Or cash out.
you
wherever
have less variance than you did before. You can't move as quickly as you did before. So keep that in mind. Cool. Buyers. What would you say to buyers?
Buyers, I'd say, man, if you're not shopping in this market,
Yeah.
you need to
You'd
get
say
out.
congrats. Yeah, if you can afford,
get out there.
if you can afford the payment, don't do the whole date the rate, marry the house thing. You like. I feel like that phrase implies like just go with whatever rate you get.
Yeah.
And then you got to be able to still afford the rate, right?
You can afford it.
It has to make sense for you, your family. If that's the rate you have for the rest of your loan, you've got to be okay with that, right? But if you are okay with that, gosh, buy now. Like get in now. You've got the most houses, maybe not the most. We'll probably see more houses come on the market in the next 2 months. And so you've got less competition. It's a slower market. You have so much more negotiating power, especially if you go after those houses that are 60, 90 days on the market. If you go after those specifically, you're going to have such an easier time getting the deal that you want, the terms that you want. If it's a longer close, if you're trying to sync up, your home selling and this home being purchased, you've got so much more variance here to play with.
Absolutely. You got time to get it really inspected, everything checked out.
And you have the ability to negotiate because sellers want to sell their homes. They're tired.
They're ready to move.
If they're on 60, 90 days, they're like, I want this done with. And so they're going to counter with you for sure as you're pitching them whatever repair you want. But like they may, when you say, look, I need this done, they may go, okay. They may not. And if you're a seller listening to this, don't fear. Like you're not going to get as long as you're priced aggressively, as long as you aren't being passive and aggressively taking on the market, right? Yeah. As long as you are aggressively taking on the market, you won't have to deal with this. But if you're not that seller who's listening to this, y'all, your buyers have more negotiating power with your property because there are less of them than there are of you right now. So.
And the longer you sit on the market, there's been tons of statistics to show it, the less overall profit you're going to make.
Yes. Oh my gosh.
So don't forego, like if you get a hot buyer, you've been on the market for 45 days, 60 days, and you get a hot buyer, work with them as much as you can. Try to get it to an agreeable place. Yeah. You're not throwing in the bathwater with the baby. You're not doing all that. But you're going to try to really work it.
Well, I think too, I think the harder situation is the opposite scenario where you get that full price offer your first weekend.
Oh, the first weekend.
And you go,
but is that
wait,
all?
Did we underprice it? And it's like, this isn't the market to be scared to question that. This is the market to say, wow, that's, and you'll know if you underprice it because you'll have in a slow market like this, you would have over 7 offers or something like that.
It's kind of like fishing.
Yeah.
You're sitting on the dock and you put your bait on and you throw it in the water and all of a sudden you snag a big fish.
Yep.
Why did you do that? Well, everything lined up.
Yep. It's your debut. It's your debut. It's the launch weekend is the weekend that you have access to the most eyes because you are new and they are seeing you for the first time, right? Yep. And so 20, 30 days later, nobody's going to look for you. They're looking at what's coming on, first off. Some websites, I think it's Redfin or maybe Realtor.com, will do the hot home or whatever, where they'll show you the homes in your market that are actually trending. And it's y'all, that's you want to be in that level. Yeah. And so
snag a fish while you're in it.
And get it, and then get out and get the deal that you want and need because you're aggressively priced, right? So that's all I'd say. The other thing to think about, the reason that we love this real estate and that why we believe and recommend to you and your family why it's something to even consider is because it's a wealth building tool. It's something that you and your family can make memories in and have experiences in. And then at the same time, it can make you money and it can help grow you and your family's net wealth.
It's like a dual purpose investment tool, right?
Yeah.
You can live in it and make money on it.
Totally. So know that in 2014, a home that was the average sales price in 2014 was $212,512. Okay, so just shy of 215. We'll say, just round it off. 2024, it's $428,538. Right, so you've seen an appreciation of 210,000 basically between those two numbers.
Basically double. Yeah.
That's a big deal. The other thing to think about is that I've shared this every single episode because I love this. Appreciation outside of COVID years, okay, ranges from 3% year over year to 9% year over year, and averages around 6%. Right, so that's what we see in this area and what goes on. But the other thing to think about, I've got a chart here that we'll have up. I'm going to zoom in on this on my end so you can see it real good. I have this chart that talks about the appreciation per decade. So everybody's always wondering, is that crash coming? And if that crash comes, right,
How long do I have
what
to
do I
make it
do?
up?
You know, is it gone? Right? All that kind of stuff. Well, look, even in the decade that experienced the crash, like there was appreciation that occurred. So for example, the 2000s is where that crash occurred. Over the 2000 decade, you saw 47.3% appreciation, even with the great financial crisis in it.
Because there's opportunity.
Because homes just appreciate.
Yeah.
Like it's what they do.
Well, and crashes just, historically, crashes don't last that long.
Yeah. Yeah.
I mean, they're like a year
it's like
to 3 years. I mean,
Yep.
it's just a quick crash. And then there's all these other years to make up for that.
Yeah. So, I mean, again, like if you bought in 2000, sold in 2010, you made a 47.3% increase in your home, right? If you bought in 2010 and then sold in 2020, let's see, you saw, it's a blue line here, you saw 44.7, increase in appreciation of your home. And 1990s, going back to then, if you bought in 1990 and sold in 2000, you made 30.1% in appreciation in your home. And just now in 2020, you've already made, 2020 first, this is wild. In 2020, this is COVID, you've already made it in 2020, 47.1% appreciation in 2020, right? And so all of this to say, real estate as a short game, maybe not the best tool. The stock market can probably beat real estate as a short-term investment kind of thing, where you put your money in day trading, right? Where you put your money in right now and maybe you nail it, where you get some money back, whatever. But as a long-term investment, it appreciates. 47.3% is a big increase. And still after those dips that you've experienced, right? Still after a great financial crisis or something like that happening.
And you can still live in it.
Yeah, and so that's 4 decades going back, 90s, 2000s, 2010s, and then now in the 2020s. And you see that even going past that, right? So all this to say, it's a safe investment, even if your appreciation falls. Now, it's a safe long-term investment. Keep that in mind.
It's all about timing.
It's all about timing. In the interim, things will happen probably, and you want to make sure you're prepared for those things. But in the long term, it's a really great wealth building tool.
Absolutely.
And can really change the life of not only you, but also your family to come, your kids, their kids, and that kind of stuff. And so
it's a great legacy tool.
It's a big deal. So highly recommend real estate to anybody watching this. If you've never owned a home before, we'd love to have a chat with you, because we think it's a big deal, and we think it's a big life-changing thing. So anything else before we go this week?
Great stats. Thank you for making sense of the market, because it feels funky out there. So it's good to know what
it shifted. Isn't that wild? Yeah. I thought so too. So pretty fun. All right, y'all. We'll catch you back next week on Welcome Home Fort Worth. And in the meantime, we hope you have a very safe and very lovely week. Hey, thank you so much for watching the podcast today. If this has been valuable for you at all, we sure could use your help getting the word out to more people. If you're listening on Apple Podcasts or Spotify, go ahead and give us a follow, and consider taking just maybe 2 minutes to leave us a review. Both do wonders for our show with the algorithm, and on both platforms, all you gotta do, head over to our show page. On Spotify, hit 3 dots and select rate. And on Apple, all you gotta do is just scroll down to the show and say leave a review. So just click that. If you're seeing this on Facebook or Instagram, a like or comment puts all the good vibes out in the algorithm for us. And on YouTube, make sure you smash that like button, subscribe, and hit the notification bell so you can be notified whenever we post a new episode. Join us again next week for more Fort Worth housing news and updates. Until then, y'all have a great week.